we're really privileged to have this group of panelists start us off today. You heard a little bit from Robert Bone from Chainalysis yesterday about cryptocurrency, about follow the money, about how we might be able to use monetary systems to actually prevent harm from happening in the first place. So these are some of the top people in the world who are working on these issues, and they're going to talk with you about them this morning. So, Jason, you want to kick us off?
Hello. Good morning, everybody. Thank you, Laura. It's great to see you after 2 years of planning. It's wonderful to see this panel come together. Good morning, everybody. Hi, Jane. Hopefully you can see me over here. I may not have gotten the directions on where to sit, so I apologize if I'm on the wrong spot. We have a fantastic panel here, and I'm just going to briefly introduce them. Their full bios are in your program, and I would encourage you to take a look at them. To my immediate left, we have Yaya Fanusie. Yaya is the chief strategist at cryptocurrency AML Strategies. He's also a former CIA analyst. To his left, we have Adam Szubin. Adam is a practitioner-in-residence at Johns Hopkins University, where he's teaching courses at SAIS at Johns Hopkins, and he is also the former director of the Office of Foreign Assets and Control at the Department of the Treasury. And to his left, we have Robert Bone. Robert is the head of cyber for Chainalysis and is also a former government employee. Robert worked at the FBI for 2 decades. And we have to his left on the screen, Jane Khodarkovsky. Jane is at the Department of Justice currently. She is at the Money Laundering and Asset Recovery section within the Criminal Division at the Department of Justice. And I myself, I'm Jason Blazakis. I'm also a former government employee. We have a lot of former government employees on this panel, and a current government employee. And I am a professor of the practice at the Middlebury Institute of International Studies. So I think we're going to have a wonderful panel. This panel is going to be looking at cryptocurrency and the financing of the far right. And I would just, as a way to set up this discussion, quote a really well-known terrorism expert in the field who passed away about 3 years ago, Walter LaCour. Walter said that terrorists do not live by enthusiasm alone. They also need a great deal of money. And when he said that, he was talking about capability and intent. Having intent alone is not going to be sufficient for carrying out an act of violent extremism. You also need capability. In the context of today's talk, we're going to talk about how these bad actors get the capability they need, and quite often that means finance. And within the radical right, it also now means, of course, trying to acquire cryptocurrency. So with that, I would love to start this conversation with Robert. Robert, what is cryptocurrency? Not everybody is going to have familiarity with it. How would you describe it to someone like my mother who may actually be watching online? So, Robert, I want to turn that first question over to you.
Thanks, Jason, so much. I appreciate it. We'll cue up the slide behind me so everyone can see it. Should pop up here. Get this to work. So thank you so much for having us here. Really have enjoyed this conference so far, and my heart goes out to all the victims and survivors of the Tree of Life and other victims of hate crime. I've had a history of working terrorism for, as you said, about 2 decades in counterintelligence. And trying to explain cryptocurrency sometimes can be a challenge, but let's think about what money is, or what it has been. Seeds, shells, gold, silver, paper. Money is dependent upon a societal need of what is a rare commodity and what is something that's hard to get, right? So when you think about those basic concepts, you really need to understand what cryptocurrency is in relation to what you know, okay? So the first thing that's a big difference between what you see as gold or a dollar bill or a euro is that those items are controlled by a central bank, by a government entity that determines value based on what's in their holdings or how they value money, right? In cryptocurrency, it is an algorithm. is a complex set of code that is written by a creator of a coin. So think of a coin as a dollar bill. That coin is derived from a complex algorithm of numbers and letters that would take thousands of years to decrypt and break into to make it susceptible to scamming or any type of manipulation. So cryptocurrency is decentralized. Our money is centralized. So when you write a check, it goes to a bank. The bank verifies things, sees your signature on it, and then it goes to the next person that you intended it to go to. In a cryptocurrency environment, things are written in a way that it is peer-to-peer. So if you remember in the old days, if you still use a checkbook, if that's the old days, you write down every transaction. You create your own ledger, but the bank also maintains a master ledger of what you have. The ledger for documentation on cryptocurrency, everyone can see. It's publicly available. It's distributed ledger that's a technology that everyone can see in the peer network. And so it's controlled by that peer-to-peer network, and it sits on what's called a blockchain. So a blockchain is basically instruments of algorithms linked together of transactions. So it's very similar to a traditional bank in the idea that, every time something happens, the bank keeps measure of that. Well, in this instance, cryptocurrency is maintained on this general ginormous ledger everyone can see. The ledger also, back to the last slide, it also prevents double spending, and it confirms on each other. So instead of one person in a central bank saying that transaction's good, everyone in the transaction has to confirm it before the cryptocurrency is moved and the transaction is complete. So to put money in your bank account, you work. You receive cash or a check or a direct deposit, or someone gives you money, right? And that's what you realize as a reality of how money is ingested by you. Well, in cryptocurrency, there's two ways to get coin. One is you trade fiat or dollar bills or euros or whatever currency in paper form for a coin, or you do something called mining. So don't let mining think you're mining something to actually get coins out of the earth. You're doing computer power to verify this algorithm that's been set by the creator of the coin. So go back to the beginning. What's the value of coin? Coin is a value by a complex set of algorithms. That's the value people see in it. Just like in the old days, if you saw value in a seashell and that's what you used for trading, that's the value you saw. So you just have to wrap your head around that basic concept of what the value of some instrument is, and that instrument is a computer algorithm. So in mining, you mine for the next block in the chain. Blocks created every 10 minutes or so. If you successfully, I'm going to use Bitcoin as an example. Remember, there's thousands of coins out there. Bitcoin's the most popular, so we'll use that for today. If you're successful in mining a block in Bitcoin, you're usually awarded 12.5 Bitcoins. And, depending on the value, and that does fluctuate because that's based on speculation, that could be, 500,000, it could be 30,000, it could be 5,000, depends on when it was mined and what the year is and what people see as value. And that all those blocks are chained together and they verify each other. So there's a little example. On your left, you see a centralized bank concept. On the right, you see the decentralized peer-to-peer, where everyone verifies the blockchain as opposed to one central group. And so everybody can see it. Everybody knows what's happening. Bitcoin, as an example, Satoshi Nakamoto in 2009 created this. There's only 21 million coin that are going to be put out. They estimate by 2024 it'll all be out on the table. But there's thousands of coins out there, Litecoin, Dogecoin, ERC20, Ethereum. All these coins are out there. The thing about coins is that there's no printing press for them. There's no tangible asset. You just can't print more coin. Once the coin's done, it's done. There's no inflation associated with this. The fluctuation in the market is really based upon social media and popular celebrities or people of influence who make comments that drive the price up and down. And a lot of people invest in it for speculation, hoping that it'll increase. But again, the value comes from what people see it is. So if you saw value in gold and you bought gold and it went up, it went down, it's the same thing with a computer algorithm. It's unique, it's special, it can't be broken, and it has value because people see it that way. And that's where we are in the 21st century. So let's look at the analogy of a check. And if I were to tell your grandma what to do here, or your mom, I would say, take out your check and let's look at it. Wallets are like your routing number, it's your bank. It's where the money goes to. So everybody has a wallet. So you can get a wallet online. You can go through an exchange and have them hold the wallet. You can get a private wallet. I recommend a private wallet because in that wallet, it does two things. It holds your cryptocurrency and it has your security information. It has a public key, which is the account number of your routing number, which basically says, this is my account. If you want to give me money or I send you money, this is what you see. But it has a private key. So when you set up your checking account, you got a signature card. You also have a PIN number. That's your private key. You don't give your private key to anybody else. That's what a private key is. That private key is on the back end. It confirms the public transference of cryptocurrency through account numbers. And it verifies that. So it's like when you send a check to the bank and they're like, I'm not sure if this is Rob or not. I mean, I did sign my signature card when I was like 10 years old, so I'm not sure if my signature is the same, but they look at my PIN, my password, my signature, and they verify, they say, yes, that's right. Well, it's the same thing with cryptocurrency. Every wallet can have millions of addresses. If it's on an exchange, it's hundreds of millions of addresses. Each transaction is labeled by an address within your wallet. So think of that as your check number. Every time you do a transaction, you get a new check number up in the upper right corner. So that's what that is. And then you have, and that your input address is your address that you generate from your wallet, and then there's an output address that the receiver has that knows how to talk. It's time-stamped, and the coin amount is labeled in the to line. So that if you think of it that way, if you understand that it's just like gold in the sense of something that's rare, that's a commodity, or a rare earth mineral, so is the algorithm, and people put value on it, this is how they transmit it, and this is how they use it. So how do you analyze it, okay? How do you analyze the blockchain? Look at that. Can you understand any of that? It's public, but it's not readable, right? It's numbers and letters. And so what companies are doing, in particular mine, we are taking this information and bringing it down to the exchange level. We break down those addresses into segments or exchanges. 2/3 of Bitcoin is sitting in different services, and those services have thousands to tens of millions of addresses. And we use proprietary technology that breaks down those addresses into clusters. And so we take clustering of all those addresses and we break it down into transactional numbers and then use open source intelligence to overlay it into legitimate purposes and illicit purposes. And you're like, well, who defines that? Well, legitimate purposes is I'm buying something from you for a good that under rule of law in whatever country you are is lawful, as opposed to going online and buying fentanyl from a dark net marketplace, or child abuse material, or participating in terrorism financing, or participating in extremist hate, right? And we break that down into those minute categories and then use overlay of other data sources that's off the chain, looking at those clusters and breaking it down into individual components of personification that allows law enforcement intelligence to then serve the ability to go out with subpoenas and lawful orders to find out the precise information of that PII. We don't collect that. We use open source only, and then conduct their investigations. So that's like the 101 of how it works, and then how our company and other companies like us analyze this material to let lawful use of it.
Thank you, Robert. It's a great primer. When I'm talking to my students, I always ask them to answer the so what question. And in a lot of ways, we've got at sort of what is crypto. And I want to transition for what is crypto to talking about bad actor use. And Yaya, you've been tracking cryptocurrency use by bad actors for a really long time. What's the attraction? Why do bad actors, whether terrorist groups, criminals, why do they use cryptocurrency?
Well, I think I'd pull back a little bit to talk about what's the broader challenge, to give some better context. And I think the key theme that everyone should think about, whether it's a criminal or whether it's you in the audience, because you all are not criminals, we assume, we have more choices. That's the key challenge. That's the regulatory issue. That's the criminal issue. And what do we have choices of? We now, because of human ingenuity and technological innovation, we now have choices in digital money formats. And Rob sort of set the stage that now there's this new digital money format it's complicated, but the idea is that We've had old digital money, which was, not old, it's still here, right? Online banking, Venmo, that's one digital money format. But as sort of Rob alluded to, that's digital money that was facilitated by financial institutions. So now here we have this new sort of software-based digital money format. So this format exists. And when you have this format, it means that now people have another option, right? The blockchain option is sort of like another channel. It's another channel that we could use to move money. So again, it's just another digital money format. So why is that an issue? Why is it attractive? Well, the challenge comes when now people have more choices on one side, and they're going to use those choices. Now, many in the audience maybe are not, because maybe they don't find the value. But others may find value in this new format that is available by technology, and they may use it for different aims, for speculation, for trying to invest, to try to get rich, or to try to operate on the dark web with this new digital money format that's more suited for cyber transactions. So on this one side, we have this widening of choices, but then on the other side, folks like us in our former positions working in government, in the regulatory environment, in law enforcement, in intel, on our side, we have to keep up with these choices. So the market has all these choices, new choices of digital money format, and our regulatory structure, it's including them, but it's new. This new digital money format is new to this regulatory and enforcement system. So that's where you have the challenge, and that's where maybe there's a gap. That's where, if you're an illicit actor, you may choose this new digital money format, and I think that's why we're here today talking about this as an issue.
Awesome. Thank you, Yaya. And going through Yaya and Robert's responses and my own thinking about cryptocurrency, a couple of things resonate with me. The concept of deregulation, the concept of decentralization, lack of a central point in which cryptocurrency is obviously regulated, and this notion of anonymity, which I would better characterize as pseudo-anonymity, because I think today, Robert, and yesterday, Robert, when you spoke, made pretty clear that the use of cryptocurrency isn't anonymous. It's quite the contrary. But I want to turn to you, Adam, as the former director of OFAC. You spent a lot of time thinking about how bad actors finance their activities. You've tracked ways in which terrorists finance themselves, and there are a bevy of ways. Do you see any similarities between cryptocurrency and other forms of bad actor financing?
Yeah, well, thank you. It's a great question, and I'm so appreciative to be here with my co-panelists. I would say there are similarities and there are differences. So in terms of similarities, I would say terrorist groups, like most criminal organizations, are indifferent to how they move value as long as they can get the value there and not be detected. It's all about being opaque, getting out from the eyes of the FBI, from Treasury, from Chainalysis. And if the value can get there, they're fine, regardless of the conduit. It could be cash smuggled in a duffel bag. It could be a hawala who's using an antique ledger system to move $5,000 from New York to Afghanistan. It could be a check, it could be Venmo, it could be cryptocurrency. In that ways, there are similarities, and some cryptocurrency is being moved in ways that I think we would all find analogous, and regulation has kept up. So if you're Coinbase, who will hold cryptocurrency in wallets for individuals like you or me, and move that to other cryptocurrency holders internationally, Coinbase is going to ask you questions. They do what's called know your customer to get at your identity. They ask for ID so that if later on it turns out that transaction went to Al-Qaeda, there's a money trail for law enforcement to follow up. In that sense, the crypto world is really not that dissimilar. There are, however, areas within the crypto world that are a lot more innovative, that are trying to take out the custodians out of the picture entirely. And that's called DeFi, or decentralized finance, where I can hold a wallet not with Coinbase or any company, and I can immediately move money without any custodian or intermediary asking a question, verifying my identity, or screening it against a sanctions list to make sure I'm not sending it to Al-Qaeda or to the IRGC, the Islamic Revolutionary Guard Corps in Iran. And that's a very different, and to my eyes, a scary scenario.
Really, really scary scenario, and we're going to scare you more now, I think. Yaya, we've talked very broadly about bad actor use in terms of cryptocurrency, the attraction of it. You've been tracking a number of terrorist groups, criminals who are using cryptocurrency to acquire, to store wealth. Could you give us a couple of examples that you've come across in your research that you find really interesting that you would want to share with the audience?
Yeah, sure. I mean, maybe I should share one or two examples from the early days of looking at this stuff, way back in 2016. Because in crypto, that's a long time ago. So I was working at the Center on Sanctions and Illicit Finance at the Foundation for Defense of Democracies, and was asking the question about Bitcoin and wondering about how terrorists might use Bitcoin. And for about a year, in 2015, early 2016, I never could verify, again, as someone who was not in government at the time, just looking and doing research, trying to answer this question, I could never verify if terrorists were actually using Bitcoin. Until one day, we got a news report that there was a designated terrorist group that was on social media, and we sort of knew that this group had this Twitter account. They had been posting before, and it was a group based, a jihadist group or consortium of jihadist groups in the Gaza Strip that, again, a designated organization that had been doing a fundraising campaign for about a year. They would use social media and they would say, you know, hey, we want money for weapons, for bombs, et cetera, et cetera. And in 2016, they posted an infographic and it had all the missiles that they wanted to buy, and it had a QR code. This is on Twitter. And the QR code next to it, it said Bitcoin. And so I saw this, and we saw the news report, but then we looked on social media, and then we clicked on the QR code, and we actually saw their address, just as Rob explained, and we could see the transactions. So this was, again, early days. This is 2016. This, I believe, was the first publicly verifiable terrorist crowdfunding campaign. We knew it was a terrorist group, and we could see what they were doing. Now, spoiler alert, they didn't really raise much money. They raised about $600. They only had a couple of transactions, but we could analyze them. Something, you know, you would have to have been in government or have had access, right, to bank accounts in order to do this in the old days. So that was a rudimentary example of crowdfunding. And I think crowdfunding, terrorist crowdfunding with crypto, is something that has its limits because it's inherently risky to do that publicly. And so there have been a couple of examples like that. The thing, I won't go into the second example, but I've seen a few of those crowdfunding examples over the years. The bottom line for me is that I learned looking at not only their transactions, but how they post on social media. They typically are trying to teach followers, they're sort of giving tutorials on how to use crypto. But the last thing that I think that is critical about how what we've noticed is that these bad actors, over time, have adapted. You see them experimenting. You see them adapting with operational security, different ways to be more anonymous or more pseudonymous to try to hide their identity. And that's sort of the thing I would take away, that even though crowdfunding probably is risky and inherently not, you know, you're not going to get a lot of volume typically, you know, we see these groups adopting upon their learning curve, just like anyone else with a new technology.
Yeah. Excellent points. Going essentially from, you know, thinking about broadly the issue to getting into the weeds about a group you know, that's on the State Department FTO list that tried to use cryptocurrency as a way to acquire wealth through crowdfunding, only acquiring $600. There's been advances, though, and you talked about the dynamism that often comes with terrorist financing and criminal financing. And I want to pivot to you, Robert, because I think there's an example in which you were directly involved in at Chainalysis, where you had multiple designated foreign terrorist organizations involved in the summer of 2020 that essentially were acquiring quite a bit of cryptocurrency. And your organization worked really closely with the Department of Justice to uncover that. And there were more than, if memory serves, than $600 at play here. Could you talk us through sort of what Chainalysis was doing in the context of that case?
Right, much more than $600, hundreds of thousands of dollars. Basically, Al-Qaeda, Al-Qassam, the Hamas brigades, ISIS, through analysis that we were doing in determining illicit categorical use of cryptocurrency, we were tracking and tracing different extremist groups moving cryptocurrency through wallets on a global scale. And one of the ways we look at this information, as I said, is open source, looking in Twitter feeds and other places to grab our initial lead development internally for our analysis. And we found that the Al-Qassam brigades were sending out addresses for Bitcoin in order to move funds. And they started out very simply with a tweet that said, send it to this address, and we watched it, and we took a hold of the address, and we found the wallets and the addresses, and we started tracing it. And we were finding people on a global scale who were submitting money to these terrorist groups. Hamas got more sophisticated. They went from just doing tweets to, as Yaya said, using QR codes, to advancing to the point that they use more sophisticated security by using the CAPTCHA. You know, when you have to verify you're not a robot, and it's the squiggly lines, you got to figure out if that's an A or a P, right? Well, you do that, it would generate a new address for Bitcoin. So they got more and more sophisticated, learning how cryptocurrency operates. And they were getting thousands and thousands and thousands of dollars, to the point that we were tracing this with the IRS and the FBI and others, and finally broke down, indicted individuals in Turkey who were money laundering, took over 300 cryptocurrency accounts, 4 websites, 4 Facebook pages, and they proclaim to say your identity can be protected. The law enforcement is not sophisticated enough. Our servers go back through VPNs and VPSs over to Turkey. Tell the police that you were trying to send it to a friend in Turkey and you have no idea how that happened. And what I want to say to you is that the analysis, the data overlay, the data we have collectively as private entities and public sector, we have the ability to put this information on top of each other and root out this type of evil and hate by using this technology to our advantage. It's there, it's real, and it's happening. And I think that we have a demonstrative way of showing in this particular case with Hamas that we can take down these groups by using this technology in a creative, inventive way. And it's just embracing what cryptocurrency is. It's embracing what these modalities are. And as the panelists and my colleagues have said, there's different versions. There's digital currency, there's state actors, there's global sponsors of terrorism, there's other things out there, and I think we could have a whole other conversation on that. But this was very powerful, and we identified the actors in Idlib, Syria, and really have continued to unmask many of these wallets and addresses, and we continue to do it today.
Really, really important work, Robert. And it's work that requires a relationship between the private sector and government. And Jane, I want to pivot to you to perhaps explore a little bit through your lens how the case that Rob described, where's DOJ playing a role in that specific case? How could you describe DOJ's role in potentially seizing cryptocurrency associated with bad actors, whether it's ISIS, Al-Qaeda, Hamas, as Rob described? And it's really, I was going to ask you 3 questions. How's that work? What's that process look like? Because I think a lot of people are really interested in the process of taking over assets when it's allowable, either through criminal or civil processes. And how important is that private sector, government sector interaction with each other?
Thank you, and thank you so much for having me. I apologize I can't be there with all of you in person, but very happy to be able to participate in this conversation with these panelists. So I'm going to try to address all of the various questions in order. So one of the things I think that's critical is the importance of following the money in the virtual currency, digital assets, just as we would in any investigation where more traditional, whether it's cash or wires or financial institutions are being used. And this really is critical, I think, in our conversation around virtual currency, because it's a different type of currency that most people may not be as comfortable with, we do, as the Department of Justice, as law enforcement, as private actors, have to adapt to that. So as a prosecutor in the money laundering and asset recovery section, I'm always thinking about how do we identify assets? How do we identify them as early in the process of our investigation as possible? Because then we do need to trace them to identify bad actors. We need to trace them to be able to seize or forfeit them. And I'll talk about the tools we have that actually transcend the type of currency that is used to fund, whether it's illicit terrorism, human trafficking, drug trafficking. So we have those tools available to us, and we just have to maximize and think critically about how to use them. So one of the key things I think that's important to remember is that we have on the books, whether it was in 2015, 2018, 2021, criminal forfeiture authorities that allow us to go after assets that are either proceeds of a criminal activity, whatever that criminal activity may be. We can go after assets that were used to facilitate certain crimes. So money that is donated, for example, or these wallets that are set up as, for charity donations that are actually, as Rob and others have mentioned, are then traced to bad actors like Hamas or other terrorist organizations. And then also with money laundering, which is sort of my main type of financial crime that I investigate, we also have the opportunity to go after assets that are involved in, which is a larger bucket, I think, of assets. So if you have more sophisticated networks that are using more sophisticated ways to try to obfuscate or evade detection by law enforcement. So they're using things like mixers, or they're trying to use decentralized finance and peer-to-peer exchanges that may not be in the United States, right? That are operating outside of jurisdictions that have robust anti-money laundering regulations or know your customer regulations. That does present a additional complexity to our investigations, but that does not stop law enforcement from investigating those cases, just like when we use techniques to investigate hawalas, right, which is an informal barter system that was also previously used to fund terrorist organizations or other types of criminality. So we do have in place, at least on the law enforcement side, very concrete forfeiture authorities. We also have civil authorities that allow us to seize these assets. What is important, though, is that we work very closely to adapt to the bad actors, just like they adapt to us, right? So someone was talking about they're just looking for ways to maximize their ability to create the harm, right, to fund the terrorist activity, to protect themselves from being identified as the individuals or networks that are funding these bad activities. And so we work very closely, at least I do as a federal prosecutor, with my FBI partners, with IRS, with the US Marshal Service, so that when we do identify wallets, whether they're in the US or abroad, so we work very closely with our international law enforcement partners, in addition to using blockchain technology like Chainalysis and others like it, we can actually restrain and seize assets early on in the investigations. Because I think what's important to remember is that we do have the ability to seize and restrain through court orders assets before we necessarily charge someone, right? So I get a lot of questions, well, what if the bad actors are abroad? Or what if they don't get extradited into the United States? That does not preclude us from having the authority to identify and restrain assets that we can identify are linked, again, as I mentioned, either as proceeds or facilitation or involved in the promotion of the criminal activity. And I think that's really critical to remember, because ultimately we want to deter these networks, right? We want to cut them off from their financial benefit and the source of their illicit proceeds. And I think that's across the board, I think sometimes gets lost because people are not as familiar with how virtual currency works. And so it seems more daunting, but really we do have the tools and we're constantly adapting so that we are not behind the eight ball and that we're proactively looking at networks and trying to shut down their ability to, whether it's engaging in terrorist financing, ransomware that gets a lot of attention right now, which also, looks at vulnerabilities in companies or jurisdictions and tries to profit from it. So we have to deprive those illicit actors of their profits and cut off their money flows. That's the most effective way, I think, at getting at some of these root causes, whether in the United States or abroad.
Thank you, Jane. I want to switch gears. Yesterday we talked a lot about and heard a lot about the challenges surrounding issues of white supremacy, and so far we've been talking about technical issues surrounding cryptocurrency. What is it? How's it work? What's the blockchain? We've talked a little bit about Salafi jihadist groups like Al-Qaeda and ISIS using cryptocurrency to store wealth, to acquire wealth. I want to pivot to the challenge of white supremacy in this space of cryptocurrency. Richard Spencer, the infamous white supremacist, has of course said years ago that Bitcoin is the currency of the alt-right. We heard a lot yesterday about Andrew Anglin as well, the so-called propagandist behind the Daily Stormer. He has historically acquired Bitcoin to fund his propaganda activities, really distasteful information. And it's great to see that he has been held culpable in a court of civil law, and we hopefully will figure out ways together through the auspices of Eradicate Hate to try to track those assets. But there have been other actors as well who have engaged in the acquisition of cryptocurrency. And Robert, at Chainalysis, you all identified something in the late part of last year, early 2021, associated with a notorious white supremacist by the name of Nick Fuentes, who received some Bitcoin from an overseas actor. And I was hoping you could talk to this crowd and those online a little bit about that case and share some information there.
Sure. Yeah, it's quite the story. So bear with me for just a moment, and I'll kind of walk everyone through the steps. So, most extremists are driven towards this cryptocurrency, as myself and the panelists have said, for the perceived anonymity, but we know that that's not correct. There are sophisticated ways that people can mix things and try to hide their pathway, but we've developed technology to really sort that out. So, one thing that we do is we constantly analyze right-wing extremists looking for pathways of movement of cryptocurrency and analyze that. And, we saw, many payments to Andrew Auernheimer, known as Weave. He was the webmaster of the Daily Stormer, managed to raise over $500,000. Lots of early donations, and money or cryptocurrency was gained in value really because they were early adopters of Bitcoin. So it just shows you that these groups are thinking about creative ways of trying to invest and get into these issues. They also are getting kicked off sites like GoDaddy and other types of websites where public forums are not accepting this type of hate speech. And so they're trying to find new places to go into to get virtual private networks and VPS servers. And a lot of this came from the wake of Unite the Right. Shinjuru is one of those groups that provides those VPNs. So what do we take from this? And that is, the Bitcoin has functional purposes, but it's also there for online infrastructure of what they're trying to do. And I'm just using the Bitcoin as an example. There's lots of coins out there, and I'll give you another example in a moment. And it has to do a lot with, how are these domestic extremists fundraising? So as we regularly monitor these crypto donations, we see something very notable. And I said this yesterday. On December 8th, we saw a huge spike in movement of cryptocurrency. And it was about $522 or 28.15 Bitcoin at that time of transfer. And we noticed this and looked at the cluster and the wallet of the transaction and noticed that it had been sitting way back since 2016. And we started thinking about this. And then obviously January 6th occurred, an attack on our Capitol. It certainly called for deeper investigation. At the time, the relevance wasn't known. And this is kind of the maturity level of where data overlays are coming and where I think we need to go. And through this, we saw that Nick Fuentes was the largest single beneficiary of this donation. He got 13.5 Bitcoin, or about $250,000 of this. And of course, we all know who Nick Fuentes is. Fuentes is the right-wing promoter in Million MAGA March. So, he was banned from YouTube for hate speech and other sites. And so what he did, not only is he receiving this large amount of Bitcoin, but he also set up concerts and went to another type of blockchain called DLive. When YouTube kicked him off, he went to DLive, and that's hosted on a blockchain, and it allows streamers to collect tips called lemons and during the live streams, and that's currency or coin that can be created and collected. So it's another way to get money. Back to the fact that it's not just Bitcoin that's out there. And this donation, though, however, was the largest that he had ever received. He had been getting small donations of up to $2,700 in Bitcoin variations through time. So very interesting. We looked at all this and we're trying to analyze, this is the largest donation we've ever seen. After the Unite the Right movement, we saw a Bitcoin donation into that group of after the event for about 62,000 worth of Bitcoin. It was sent to the Daily Stormer right after it. So this amount was 8 times larger. That was very significant. We were trying to figure out why is that happening. So based on the timing and the size of the donation, that was widespread speculation that maybe it was a state actor, maybe someone was trying to sow discord in the United States from a global threat power that was out there, but we weren't really sure, but it was one of our theories of what we were looking at. So the next thing that kind of stood out was the uniqueness of the donation addresses. So you remember I showed you in the quick PowerPoint slide of how many addresses could be out there and how we cluster that together. So imagine trying to cipher through thousands and thousands of addresses. We were clustering that together and saw that many of them were far-right donation addresses that we had been collecting over time. And the recipients, some of the recipients, for example, was a random torrent tracker from a computer science background. And there was also a donation to a person named Luke Smith, who is a YouTuber that speaks about technology and minimalism. And so it really appeared that whoever was making these donations from this address was really far-right leaning. We also saw a donation to a Frenchman by the name of Vincent Renard, who was a French neo-Nazi and a Holocaust denier. And it certainly indicated that our donor was very extreme. And more importantly, though, we started to see this connection to French anti-Semitism. And it really narrowed the scope to who our donor was and really allowed us to deep dive into the analysis and analytics of what was going on. And so lastly, we saw a donation to a niche service that provided vulgar email addresses and VPS services, and I won't get into the horribleness of what the site was, but it was pretty profound. And these transactions were all quite unique and really started to stamp out kind of in the analytical sense very specifically what we were looking for. We saw these batch withdrawals, and we saw this address committing to 22 different recipients, which was kind of odd. Remember my slide about a check number and different addresses at each transaction? So it was kind of weird to see this batch group kind of go out. So summarizing that, we said, had to have far-right beliefs, early adopter of Bitcoin, probably a French citizen, connections to France, interest in vulgar email addresses. And so we're trying to balance that. Is it a state actor? Is it someone posing as that? And finally, kind of using software and data, we started looking down into a closer look at the data. And what we started to see with these single clusters that had been historically labeled as extremists within our programming. And we saw that the particular wallet had Bitcoin from 2016, but was really only active from 2018 through December 8th, 2020. That's very important. With the final transaction being the one in question, and after December 8th, the Bitcoin level in the wallet went down to 0. Remember, it's a public ledger. We can see everything. We can see how much money you've had or cryptocurrency over time, when it was there, and how it moved, and when it went to, and what your final balance is. I couldn't see that in your bank, but we can see this on the blockchain. So we look at the conversions, we look at all this information, and we get down to the bottom, and we see that it's been active since 2013. And the legacy wallet shows that most of its Bitcoin came from a French exchange. So we get more into the French exchange and look at the matches on our profile. And we look at open source information that led us through that exchange to a website. And on the website, you saw a vulgar address associated with what I said earlier about someone that liked that type of vulgarity and using those type of monikers that stamp on top of them to say who they are. And you might wonder, well, that's a very interesting profile of an extremist donor. It indicates he's interested in these things. So we started doing more Google searches and more open source information research. And we saw a lot of this information in French, which went along with our other theory that it's been an extremist. And what really stood out was the date of December 9th, where the Bitcoin amount went to 0. And what was really striking was the gap of the 6 years of lack of movement. And so we did some more research on that email address and December 9th, and we found a blog in open source called The End. And we realized it was a suicide note. And that suicide note had various elements of the investigation all came together and had numerous conspiracies in there about Holocaust denial, the collapse of the Western civilization that this person perceived was happening, and that this person was bequeathing their fortune to certain causes and people, and reference to Bitcoin donations. And the investigation really took that really unexpected turn of where were we going with this? It wasn't the state actor, it was specifically a person. We reached out to other open source material in France, French 20-minute show and Associated Press and Wall Street Journal, confirmed the person and found out that it was Laurent Bachelier, who was an extremist out of France who had donated all this. We confirmed all this through open source material. And I think what it does is tell you a very interesting story about the interconnectivity of how people are using the blockchain, how they're using cryptocurrency, the intricacy of one person's cause influence through social media and other mechanisms out there where they're seeing like ideologies of hate and places they can promulgate in their dying breath a movement of cryptocurrency to fund causes. It's intricate, it's complex, but it's also very simple in the set that a lot of this information sits out there, and it's a matter of going to grab it and making a story out of it that you can understand in a logical way to place cryptocurrency as the modality of influencing and providing opportunities for other hate groups for their future acts of what they're trying to do. And I think that's one thing I'd conclude with is, can we do predictive analysis? Can we look at patterns? Can we start taking this open source data that's publicly available and piecing together these like stories to try to be preventative before an act occurs and to stamp out hate as we see it emerging through the use of money?
Thank you, Robert. I think you and Yaya have picked up on some really important points that I would just want to emphasize. This notion that the financial picture as it relates to bad actors, we shouldn't be thinking about that in isolation of other things happening in the world, particularly as it relates to the use of social media and the advancement of ideological perspectives, whether it's the radical right or Salafi jihadism. I want to think about the future. We're down to our last 14 minutes here, Yaya, and you spoke earlier about the novelty associated with cryptocurrency, and Rob has talked about the radical right being really interested in cryptocurrency. What's the future hold? Will the novelty wear off? Is there a future in these next few years where you see potentially bad actors continuing to glom on to the use of cryptocurrency? And how about the radical right? Do you see them continuing in this space?
Well, I'll just be real quick with the novelty. I mean, I think the future, obviously hard to predict, but from what I'm seeing, key is probably that the cost for illicit activity in crypto, I think, are raising, right? As regulation sort of globally sort of gets, wraps around the crypto space a little bit more. So I think it's going to be, you're going to probably see two different ecosystems. I mean, the crypto space, whether it's going to expand or it's going to be maybe more part of the regular financial system. There's a little bit more overlap nowadays. So what does that mean? It means as the sort of above ground crypto gets established, it's going to be harder to be illicit in the above ground. But there's going to be an underground always, and that's because you're going to have this innovation. So I would say that that's what we should be seeing, that there are going to be two ecosystems, the above ground and the below ground. But the key thing is illicit activity is going to continue, but to operate in this above ground, you'll probably have to be more sophisticated. The last thing I would say is that I think it's going to be important to look at merchant payments. We've been talking about just transferring and sending money, et cetera. What we haven't talked about is if, let's say I'm less sophisticated and if I can't really hang it, I can't go through the regulated sector, I may look for opportunities. As an illicit person, I may look for opportunities to simply spend that crypto. So if there are merchants that accept crypto, then that's the same as, as cashing out. I don't need to cash out if I can actually get services and goods with my crypto payments. So that's something to keep an eye on.
I want to save these last 10 minutes to speak a little bit about solutions. And I really think, Yaya, you set us up well with your ideas about above ground and below ground. And Adam, as a former director of the Office of Foreign Asset Control, charged with tackling illicit financing, are there specific tools in this space, whether it's above ground financing or below ground financing, that we can use to perhaps tackle the challenge of cryptocurrency as it relates to the radical right? Are there tools available to us that we've used in the forms of countering international terrorist group financing that may be applicable here? And just for everybody's awareness, Adam wrote on October 10th in the Wall Street Journal a great piece that I think he's going to preview for you, so you don't have to go behind the paywall. Adam, I'd love to hear your idea on potential solutions in this space.
You can go behind the paywall too and read the Wall Street Journal op-ed. Subscriptions are not costly, and I think they'll even give you a tote bag. No, I'm kidding. I'm not here from the Wall Street Journal and to promote subscriptions. So I think what Yaya was saying is right on point. This area of cryptocurrency is booming. We haven't given you any kind of top-line statistics. I think it's worth pausing for a second to do so. There's currently $1 trillion in various cryptocurrencies in the world. That's more than there is held in the Japanese yen, and it's quickly growing, and I predict within a year will outpace the amount held in the British pound. That's a staggering amount. This is no longer a kind of niche pursuit by libertarians and privacy enthusiasts. So we need to be quite sober and serious in how we approach this. In terms of regulation, what I mentioned earlier is the regulators have known what to do when things take a traditional form. So you've got a company that's moving cryptocurrency for individuals around the world. Well, we'll treat that as a money service business, just like we would Western Union, MoneyGram, and that part is working. But there's all sorts of new formats and new ways of moving cryptocurrency, including peer-to-peer, which Rob mentioned, or decentralized finance. There's also anonymity-enhancing tools, like mixers, which Jane mentioned, or just currencies which don't show up even in that quasi-anonymous form on the public blockchain. Right now, I think law enforcement feels okay, because the bulk of activity is in a form where Rob's methods that he was describing work, between monitoring the public blockchain, marrying it up with all the data that's available, and then, critically, watching the on and off ramps. So somebody has $30,000 in cryptocurrency. In order to get it off that public blockchain and turn it into something more usable, like US dollars or euros, they need an off ramp. And vice versa. They need to come on to cryptocurrency. Well, we've got pretty good tools, especially governments, to monitor the on and off ramps in terms of who's holding the currency. But if you're a regulator or somebody like me who's just constitutionally worried, you can't just think, do we have it under control right now? You have to think, what is this going to look like in 2 years, in 3 years? And I find those trend lines worrisome. I find the more anonymous parts of the crypto world are likely to grow and grow quickly, because many people are looking for privacy, are mistrustful of government, even those who aren't criminals. Second, and Yaya just alluded to this, the need to cash out is going down with each year. If there's $1 trillion in cryptocurrency out there, it's likely that pretty soon, not only will your pharmacy and supermarket accept cryptocurrencies, but a car dealership or even real estate transactions could, in the foreseeable future, happen in cryptocurrencies. Well, if people don't need to go on the on-ramps or off-ramps, then there's a real danger that law enforcement's eyes are going to start to go dark. So that's a major concern. That's what I was writing about in this op-ed, and I think that's where regulation needs to come in to say, no, if you're going to operate above ground, to pick up Yaya's metaphor, you need to adhere to certain baseline accountability safeguards that include knowing your customer and that include making sure that money isn't being sent to terror groups and to sanctioned parties.
Thank you, Adam. It's $6 a pop to buy the Wall Street Journal where I live, so that's great. That
Totally
saving us some money there. That's a lot. It's a lot of money for the newspaper. It's another story talking about paywalls and things like that and disinformation. That's another panel, I think.
Maybe you should just use Bitcoin to get to pay. Do they accept this? WSA accept Bitcoin?
It's like 1/100th of a Bitcoin, right? 1/1000th. We have time for maybe 2 more questions. And Jane, I want to skip to you, then maybe go back to you, Adam. Jane, you also are working on financial issues in the human trafficking space. You've seen cryptocurrency being used by human traffickers. Love to hear your thoughts on that challenge. And then more broadly, in terms of solutions, where do you think the government can improve in this space? What more can the government do to stop bad actors, whether they're human traffickers, individuals that are terrorist financiers or criminal syndicates who are in this crypto space? What more do you see happening here that the government can do?
I think importantly, we cannot think about crimes in silos. I say this a lot in my human trafficking practice. There is no way that law enforcement, whether in the US or abroad, that can only think about one type of crime at a time. I think criminal networks, as Yaya and others have alluded, are going to become more sophisticated, and we have to adapt. But also, I think what Rob discussed that Chainalysis does really resonates with me, because in sort of 2018, 2019, law enforcement primarily focused on, right, if you are a financial institution, you need to file a suspicious activity report or a currency transaction report. And then we hope, right, that it gets to somebody like me at the Department of Justice to review. I think we need to more proactively look for those trends in not just in one type of crime, and I'll talk a little bit about the human trafficking and child exploitation, because these patterns are consistent throughout, no matter what we are specifically looking at as a prosecutor doing money laundering or terrorism or national security. And the reason I say this is, if we were having this panel 2 years ago and focusing on human trafficking or child exploitation, we probably would not be thinking about virtual currency. Well, we are now. And the reason for this is bad actors adapt. So I'll take, I have so many limited things I can publicly talk about. Well, let's take the Backpage case, right? MasterCard, Visa, talking about Yaya and like the purchasers, the merchant processors, they said we're not going to process payments on this website. The potential that this is related to human trafficking or child sex trafficking is too high, right? So we don't want to be involved in this. This poses a financial threat to us as a company and our reputation. That didn't stop bad actors, right? They just went over and used virtual currency exchanges, some of which you could argue may have looked the other way, may not have known that they should be doing KYC or due diligence. And so as law enforcement, we can't only be focused on the traditional bad actors. We have to also look at those who are facilitating that, who are allowing those transactions to pass through. So if that means that you, take the IRS and HSI investigation into welcome to video with our fantastic IRS partners, and Chainalysis was also involved in looking at those transactions. We then have to say, okay, if you're receiving virtual currency or you're getting paid and you're using it to host a website, whether it's to promote child exploitation, human trafficking, terrorism, we're going to hold you as accountable, just as we would if it was a traditional brick and mortar bank that was obfuscating their BSA or record keeping or OFAC sanction obligations. So I think we have to take a holistic approach and be proactive in identifying not only the traditional bad actors that we think about, but those who are facilitating and then profiting from that. And that, I think, is the best way to stay ahead, or at least try to maintain a way to prevent people or networks from thinking that they can profit, because the risk to them is so low. We have to increase the barrier for their profit. And the only way to do that is being strategic, to working proactively, to being thoughtful in how we're targeting those transactions and who's facilitating that, whether it's an exchange, whether it's peer-to-peer, whether it's someone who is purposefully operating out of another country that we know would traditionally maybe a state actor and promoting some of that bad activity as well.
Thank you, Jane. We're down to our last 30 seconds, but I still want to ask Adam one last question. You said you were constitutionally worried, Adam, and as we think about trying to counter illicit financing of the radical right, specifically in the space of countering financing of terrorism and anti-money laundering, as we think about new implementation, where should we be worried about where this could go in terms of regulation, in terms of government overreach? Why are you constitutionally worried?
Probably because of my Jewish heritage, but that's not the question you're asking. I think the trickiest, toughest issue here, and thankfully we're out of time so no one can expect me to answer it, just to frame it, is, Jason, when you and I were working on going after terrorist financing, we were talking about international groups, and they were on a blacklist. They were on a State Department list or a Treasury Department list. And so if there was a charity in the US, and there were a number of them pre-9/11, that were raising funds for Al-Qaeda or for Hamas, the FBI could have shut them down, DOJ could indict and imprison them, and Treasury could freeze their assets. We don't have that list for domestic hate groups, for the Proud Boys, for neo-Nazis, for the Klans in the US. And to start thinking about what it would mean to create that list raises many very vexing legal and policy questions about free association and free speech. But I will say it is difficult to imagine a comprehensive effort to take on the financing of these groups without that tool. So I think that's a really tricky issue that hopefully later panels will solve for us.
Yeah, excellent. And we're out of time. And I want to thank my panelists, Yaya, Adam, Robert, Jane. Thank you for taking the time to be here today. And again, thank you, organizers. And look forward to seeing you on the margins of the meeting.
Thank you.
Thank you.